Welcome back, YouTube. So we're doing a special video. As you can see here, I'm in my car, and the thing that holds my camera absolutely broke, so I'm holding the camera and trying to drive and shoot this video. I think you're going to find this pretty interesting here. I want to show you guys what my Starbucks is doing, and then I want to take you down the street to Dutch Brothers and see the difference here. I think it's pretty mind-blowing. This is Starbucks right now, right down the street from Dutch Brothers. Dutch Brothers is about, I think, about a 2-mile drive from here. I just want to show you guys that in my area specifically, it's been pretty clear to see as I drive by Starbucks on a consistent basis. It gets its morning rush, but where it dies down is during the middle of the day, and I'm just not seeing the same drive-through traffic. So now I'm going to take you down to Dutch Brothers. Now the thing I want to point out is there's actually 2 Dutch Brothers in my area within about a 5-mile radius from one another. So we're going to go check out one. I'm probably not going to go to the other. Both are pretty consistently busy. Now I haven't been there yet, so we're driving together to see what the foot traffic's going to look like. So let's do that right now. You can see here that there is 2 lanes of traffic flowing through for Dutch Brothers. It wraps around this small little building here. It has a dual drive-through. And I would say each line has about 6 cars in it. So currently there's about 12 cars right now. There was a little bit more in here as I pulled in. Here comes another car right now. The mistake I actually made was that this Dutch Brothers was out of the way. It was about a 10-mile drive, not a 5-mile drive. This is in a more rural area versus that Starbucks, which is telling me people are actually driving out of their way to come out here for coffee. And so I guess I'm going to run in and pop my cherry on Dutch Brothers. I actually never had it. As most of you know, I was invested in the stock, and I want to go over what I saw that was a little bit concerning. But the one thing I can't get past is that I drive by both Dutch Brothers and I drive by Starbucks, and Dutch Brothers tends to be busy very, very consistently, as I just showed you guys. Literally drove down the street at the same exact time that I filmed that Starbucks clip versus Dutch Brothers, and we could see that there's about 5-6 times more people at Dutch Brothers. I did get one of their more popular drinks, which is like a frozen caramel type of drink here. It is hot as crap. I live in Orlando. So if you're wondering kind of the dynamics of where I live, I would say upper middle class, a lot of traveling people. We're 6-7 miles away from Disney. This is actually off the beaten path, but as I showed you, people are driving here just to get iced coffees and to order whatever they have to offer. This is definitely a dessert drink, but it is friggin' delicious. I'm not even going to lie about it. This is pretty awesome. Now, this was $6 for this iced coffee frozen caramel setup here. Plus, I tipped $1, so it was like $7, which I'm guessing is pretty darn comparable to Starbucks. So, I mean, this is it was pretty quick. I'll tell you right now, the 12 cars that were here are all gone. There's a couple cars in there right now. Nobody's at the window. They cleared out the place very, very quick, efficient. I had to wait a little bit because they were backed up on the cars that were in there. So I waited about 3 or 4 minutes, ordered my drink, and then a minute later it was there. So about 5 minutes in the heat, and I'm already sweating because it is hot as hell out. So this definitely hitting the spot. And let's dive into the financials together. So as you guys can see, I am back home, and just by the eye look here, guys, I drive by both of these places on a consistent basis, and every day, no matter what time of day it is, usually both drive-thrus are busy at Dutch Brothers and both locations. When I go to Starbucks, I've noticed Starbucks is not quite as busy as it used to be a few years ago. I used to have meetings at Starbucks. If most of you don't know, I was in financial services, and that'd be a great place to kind of break the ice, meet somebody, have a coffee, and maybe an hour and a half conversation. But in the now boom of technology, it seems like people don't want that face-to-face interaction. They just want their product, and they want out. They want it fast. They want it efficient. They want it at a reasonable price, and they obviously want it at a high quality. And I feel like Dutch Brothers is kind of hitting on all those cylinders. When I took a peek inside the business, there was only about 3 baristas in there, very small facility, and it's just pushing product through the window consistently throughout the day. When we look at Starbucks' business model, it's more of a busier time through that 9 a.m. to call it 1 p.m. time frame there, where lunch hits. They have sandwiches and bagels and things to offer for lunch. But I'm starting to see pretty consistently that Dutch Brothers, and this is specifically my area, guys, that Dutch Brothers is actually starting to get way more busier than your traditional Starbucks is. So I wanted to bring that to your attention, but now I want to kind of point out the concerns I have. Let's just start out with the pros of the company. Obviously, I really like the business model here of it being fast, efficient, and just multiple transactions. If we think about just the short time I was there, I spent nearly $7 on one cup of coffee, and there was about 14, 15 other cars coming through versus Starbucks' 0 cars coming through. And if we just figure that the average person is spending about $10 per order there, well, that's $120 to about $150 that they made in the matter of a few minutes that I was there, versus Starbucks looking pretty dead at that point in time throughout the day. And just to kind of recap, this is in the Orlando area, and it was around 2:30 p.m. that I was at Starbucks and pushing 2:45 p.m. when I arrived at Dutch Brothers. First thing I do want to point out with the company is the consistent top line revenue growth, growing 30% pretty consistently into the trailing 12 months, doing over $1 billion of revenue now. So everything from the company seems to look good, even from an analysis standpoint. $31 is a low, $49 is a high. Currently, the stock's trading around $31. They're trading at a pretty high forward PE, sitting at roughly 77 to about 72 times forward PE. But once again, this is a company growing very rapidly. The 4 holds, 2 buys, and 4 strong buys. So overall sentiment is pretty positive to neutral for Dutch Brothers at the current price that I think it's sitting at, right around that $31 mark. Now, after the recent earnings, there were some question marks here as the stock sold off from nearly $40 a share down to $27 a share. It took a pretty substantial hit. And a few things I want to point out that were concerning for me and why I kind of pumped the brakes on this company and maybe re-entering when it dips back down. It achieved $325 million of revenue in the quarter, and that is a 30% increase year over year. So still getting to that 30% growth rate consistently here. The growth rates are slowing down, and that's one of the reasons why we saw the stock price kind of take a hit here. They opened up 36 new shops during the quarter, which now surpasses the total amount to 900 shops, which is a milestone that they were looking at. And now they're projecting total revenue to come in around $1.2 billion to about $1.23 billion, which is a tick up from the prior guidance. So you're probably thinking to yourself, well, they're growing 30%. They have 900 plus stores now. They're guiding for more revenue. What could possibly be the red flag here? And that's what we're going to get into. When we look at earnings from last year, they were doing negative 2 cents of earnings, now in the positive, doing 21 cents of earnings, and did majority of that in this quarter at plus 12%. At plus 12 cents of earnings. So we can see that the trajectory for earnings are now starting to follow that top line revenue growth. And this is where you normally get really strong stock appreciation, is when those fundamentals start following that revenue. But here's where the concern lies for me. There were 56 million shares outstanding, jumped up to 92 million shares outstanding, and now in one quarter it has jumped up to, from a diluted basis, 102 million shares outstanding. This is a substantial amount of dilution taking place, which was a red flag for me on the company. They're basically adding in 15, 20 million shares every quarter here. And that essentially ruins our ownership into the company when they're adding that many shares to the market. Now, the fundamentals are following that share growth. They went from negative 2 cents to now positive 21 cents, even with that dilution taking place. So this is the tough part of trying to figure out where fair market should be for the stock. But I did update my analysis on the company. So what I'm doing is they've been able to show 30% consistent revenue growth. I'm going to knock that down to 24%, 14%, and 6%, just building some safety for me personally here. And as we saw, they're projected to do right around $1.2 billion of revenue. I got them doing 1.19, so just building a little bit of safety there as well. Looking for a double-digit rate of return, right around 10%. And here's where we come up. We come up with right around a $27, $28 stock price. So I think for me personally, when I look at Dutch Brothers, if it's in that 27 and below stock price, that's really where I think it gets very interesting from a company perspective. And that's incorporating some safety built in that growth rates are probably going to slow down. I have them undershooting just a tad from from the revenue that they're projecting this year. I also added in a substantial amount of dilution going forward because I do think this is something we're probably going to see. The other thing I want to point out is I personally was noticing a substantial amount of number of shares being sold here by the insiders. When we compare number of open market buys to 16 versus open market sells to 106, substantial amount more of selling than there has been buying. And to me, that tells me that to me is really not a big thing, because when we look at these newer companies that IPO, there's a lockup period, and then at certain points of time, they have to sell to actually make money. There's a lot more selling than buying, and that's pretty normal, believe it or not. I remember when Facebook IPO'd, Zuckerberg was selling stock around $25, $30 a share, and I'm sure looking back, he wishes he would have held on. But when you're a newer company and you do a lot of stock-based compensation, or there's early investors that want to cash out, you're going to see that change hands, and I think that's what we're seeing right now. I think this is a pretty normal aspect to their business, but the concern was the amount of shares that I saw that was on the market versus, how fast they're growing. They're growing their share count by nearly how fast that they're growing. They're basically growing their share count almost as fast as they're growing their top line revenue, and that's usually not the prettiest things to see. And then you have some insider selling as well, and then we topple that with the cycle that we're in, the end of cycle behavior, where I think we could see a pretty substantial pullback on companies like Starbucks and Dutch Brothers, which to me would be actually a buying opportunity from what I'm seeing and how they're executing. As I showed you guys, when we physically went to the store, they're making quick, easy transactions. People are there. They're going out of their way to get there. They're spending money when they are there. And when I compare that to Starbucks, I actually think from my market alone, it looks like they're outperforming Starbucks on a few different metrics here. So as always, guys, want to kind of just show you what I've been seeing in my local market when it comes to Dutch Brothers and Starbucks, but also show you some of the concerns that I had with the fundamentals as well. As always, guys, appreciate your time. We will see you in the next one.